back to another episode of Scott's Quick Cash Class. Today we're talking to you about how to start investing, what you need to do, your first 3 steps to invest, right? So this is out there to all you guys 18, 19, 20, 21, just got out of high school, or maybe you're just in college. Here, help you out with some investment ideas. So today we're going to be talking about how we can kind of get our ball rolling, right? If you don't already have one going, or maybe you do, how do we keep it going? How do we keep that, keep your investments growing, build you that emergency fund? So we're going to start with a couple stats for you, right? 30% of Gen Zs are already investing. That is unbelievable, because if you look at the previous generation, baby boomers, 6%, and Gen X only 9%, right? So you guys have already started getting the ball going, because you have time right now, and that's really what you need to take advantage of. You guys are young, so even small deposits, $20 here, $50 here, $100 here, if you can do that on a consistent basis, you will build your portfolio up. And so that's huge that 30% of you are already doing that, because at the same time, Gen X and the boomers at your age were in the single digits doing that. So another interesting fact, 60% of Gen Z investors already hold individual stocks. So I just want to throw out a little word of caution. I own individual stocks. I do think they're a good play. I'll just caution you with how much of your portfolio is in individual stocks. A couple people out there, some big finance guys, they'll generally say no more than 1% to 2% of your net worth in there. But I look at it this way, right? If you're young and you don't have much of a net worth, right, you're trying to get that kick started. So I'm of the playbook that taking some gambles early, when you can recover for them, is a good idea. If you were 60 years old and you were putting a lot of your portfolio into individual stocks, I would caution you a little bit. But when you're young and you need to have a few different investment buckets, and we can talk about that later. But you got your emergency fund, that's not really an investment bucket, but you got money built up there. And then you have maybe your boring investment or investments, maybe that's real estate, maybe that's an ETF, which we'll talk about in a little bit, a bond fund, something very calm, very relaxed. If you want to take a hot gamble on a flyer stock, by all means, go ahead. But just remember yourself, you always have to have a backup plan, right? Like, if this goes to zero, am I broke? Probably don't recommend that. If this goes to zero, am I eating ramen noodles for a little bit? I can live with that. Okay, then maybe look at it that way. So good job on that. And then 25% of Gen Zs are investing into ETFs, which stands for exchange traded funds, which basically an ETF is they take a pool of stocks or an investment, and then they package it all together and just sell you, they put a price on it and sell it to you. And then based on how those stocks move up or down, the ETF will then move up or down. So good job on you guys out there. So you want to make sure, we kind of briefly talked about that. You want to make sure you get the 3 to 6 months of your bills in a savings account, or some account that you don't readily see or readily touch, but that is accessible to you. So maybe that's another bank that's on the other side of town. Maybe that's a safety deposit box. Maybe that's online. You open an online bank and you take a portion of your money and you just send it over there after your pay. Whatever that scenario is, you want to get 3 to 6 months, because I mean, obviously, if you have more in there, that's great. But at least having 3 to 6 months gives you a little bit of breather room if things go sideways, right? Because having money gives you options. We've talked about this in previous episodes. It's not about bragging rights. It's not about flaunting your wealth. At least it's not for me. And, based on my experience with the younger generation, is you guys are looking more for experiences. And I'm right there with you. I'm not about possessions. I'm about being in control of my time and being in control of what I want to do. And so having that 3 to 6 month cushion in there allows you, if something happens, with your job or whatever, that gives you your options of, you know what, I'm not going to take the first thing that comes. Or maybe, hey, I need a break. Maybe I'm going to take a month off, spend a little of my emergency fund, and then I'll get back to looking for a job. So that's what that does for you. Second thing, got to open an investment account, right? So there's a few good ones out there. I'm kind of partial to Robinhood. Not saying you got to use them. Not sponsored by Robinhood at all. But Webull's another good one. Fidelity and Schwab. At work we use Schwab, so I'm familiar with that one too. But Vanguard's another good one. But you want to open an account and do it immediately. Get that first bit of money in there, right? Whether it's $25, $50, and then set up an auto withdrawal that automatically comes out and goes in there. And there's commercials on this all the time. The famous one is, oh, give me 17 cents on Bitcoin, right? Which, by the way, we're not talking about crypto, but crypto, Bitcoin, big movement today for those of you guys that are seeing that. But you want to make sure that you get an account open. I know a little story for you. Me and my wife, when we were 18, we opened up a mutual fund together. We had probably about $1,200-$1,300 in that mutual fund. We closed it and moved to Vegas. We used that money when we moved to Vegas, but I did a little math on that. If we would have kept that mutual fund with just a little bit of money we had in there, if we wouldn't even added any more into it, we would have had almost $50,000 in there, which is kind of surprising considering, we didn't do anything with it, didn't put anything in there. But that's one of those things where you don't think about how much you're losing because you didn't put it in, right? And that's one of those opportunity loss scenarios, which I definitely could talk about another time. But when you miss out because you were doing something else, there's a cost involved to that. So don't miss out. Get involved. Go ahead and find one of these places: Robinhood, Webull, Fidelity, Schwab, Vanguard. Get one of them. Get signed up. Get your first deposit in there as soon as you're done with this. And then step 3, you got to pick your first investment, right? So I'm gonna make it real easy. Find an EFT somewhere that replicates the S&P 500. Do a little research on your own if you're not sure what the S&P 500 is, but basically it's a collection of 500 companies that represent all the businesses in the United States. They're a pretty good judge of how the economy is going with those businesses, but it's very easy. Get in there. It's a low-cost fund, and that gets your foot wet. That gets you in the door, and then that gets you excited about investing more. So hopefully you learned something new today. I'm going to leave you with a tip of the day and question of the day. So tip of the day is, which ETF or index fund are you excited to invest in first? And what's your long game with that? What's your plan with that? And then tip of the day, pay yourself first. Every wealthy person that I've ever talked to, every book I've read, every one that I've ever watched has always said pay yourself first. And I've been following that principle for probably the last 10 years. And it definitely has made a difference on how I think about money, and 2, how I handle my finances. Because I'm always about, I need to make sure I invest first before I pay other bills. And if I can't invest first, I don't buy it, right? So tip of the day, pay yourself first. With that, I'll leave you there. Every day I'm bringing you 5 to 7 minute videos with different finance topics. Hopefully you learned something new. I'm never going to try to sell you anything, just here to help. Click below if you like what you heard. Leave us a comment. Till next time.